when you get to the third generation of a business, when you're going into the third generation, the fourth generation, a lot of problems, you could tell by as far as a lot of these Italian steakhouses, the fourth generation doesn't want to work that hard. What they call the entitlement generation. They just want the money.
Yeah.
So you're going to be going to a VC group. There's been a VC group that's bought a couple of nice restaurants here in town, and I helped out with those things, and they're doing well. So let's back up the bus a little bit more to going back what you're saying about mom and dad. When you're planning for the parents, you want to make sure you got a 3 or 4 leg stool. You've got your retirement funds, your IRAs, your 401ks, you got your Social Security, you got your other investments, and you got whether the business are coming. And you want to make sure you got a 3 or 4 leg stool that can take care of that and go into the future so that they don't have to worry. But first off, you have to figure out what the lifestyle is of mom and dad, if they got any debt, how big they live, and where they're comfortable.
They're traveling the world every quarter. You got to, if that's their thing, you got to make sure they got the cash flow to do it.
Right. And I guess the whole thing is what is important to you? What is important to you? How much do you want to leave a legacy, or do you want just to, give some money to your kids and go off and be a fat cat?
Let me talk to you about a brain buster. Let's say you got a company that's worth $100 million or more, and the parents are desperately trying to figure out how to transfer it to the kids. And you're looking at every option. Gifting, you can sell the stock to an intentionally defective trust, and that's too complicated for us to cover today. But the bottom line is the note can get paid off with money that would otherwise go to taxes and wipe an asset off the balance sheet. But you still got to come back to valuation. And in an estate planning scenario where you want to pay the least amount of tax, you're begging for a valuation that's as low as possible because you want to try to do all the gifting and shifting and selling and everything at the lowest value. And the risk, talk about the risk. If you really overdo your discounts of the value of the company, what kind of audit risk do you have after you've done all your planning and the stock is in the next generation and all that? And then the pencil-necked geek with the thick glasses shows up and he says, I'm from the IRS. What sort of, how do you deal with that?
So when you're gifting to family members, in the form of a family limited partnership, a flip, this typical generation is what I'll do. Basically, the IRS likes to see 35%, a discount no higher than 35%. So I was involved.
But the starting point is also, there's a lot of fudge with that, right?
Well, I was involved in a valuation, and we're talking a big one. I mean, large, north of $100 million, that we had a discount of an excess of 50%, and it passed mustard.
Are you serious?
And we got a letter back.
You got audited?
No, we got a letter back.
Oh my gosh!
So it just depends upon if you do your homework. But
you got.
I've been doing this for over 25 years. That's the first one that I ever had that was
that aggressive.
That was that aggressive. Normally, 40%, you can get by with 40%, 40 in the low 40s.
But it's a combination of two things. You have a lack of marketability discount,
and you got a lack of control
discounts. And so I don't know if do we want to get into voting and non-voting and discounting the voting?
Well, as far as voting and non-voting, there is no, in all the studies that have been made, there is no extra discount for that. Okay.
Really?
Yeah. But
now I hear about it, the non-voting discount all the time.
Yeah, but you're not going to get away with it.
How do you get to a 40% discount then?
Well, it's the controlling and lack of marketability.
Those two.
Yeah.
Okay.
But you've got another.
Not the minority.
But you've got another one that comes into play in some cases. Key man discount. The businesses revolve around dad, and if dad's gone because he's got all these relationships,
there could be a big loss in revenue.
Yeah. You got to do your homework.